us from the onset of the financial crisis, but investment banks' resizing and soul-searching work is not quite done yet. How will banks look like at the end of it? So, Michael, you have been looking exactly at this subject. Who do you think is doing better in trying to find a new model?
It's difficult to say at the moment. The funny thing about the situation now is that it doesn't look like any of the banks can really tell what's going to be happening over the next 3 to 5 years or what their business models might look like at the end of that period. A lot of the regulation that has come in over the last 5 to 7 years is now in place, but there's still more to come. So it's very difficult for banks to say, here's how we're going to look in 3 or 5 years' time, given that they still have enormous problems around profitability, capital raising, revenue, that sort of stuff.
And profitability was splashed all over the news recently, in particular one case.
Yeah, not a great month for Deutsche Bank.
Yes.
They announced, at the end of the third quarter, they announced a very surprising €6 billion loss, mainly due to the extra capital needed to go to prop up their investment bank. The new CEO, John Crine, has come in in the summer with a clear remit to reposition the bank as a whole. They're obviously going to have to take a very hard look at the investment bank if it's costing them so much money. It's very difficult for them to reposition it, given the sort of enormous changes that are going on at the moment. But obviously that was quite a surprise to the industry, I think.
So you mentioned Deutsche Bank, which is obviously a bank based in Europe. Who is doing better between the European investment banks and the ones that are headquartered in the States? Is there different there?
It's a clear lead for the US at the moment. If you look at the revenue tables, the vast majority of the top 10 profit-raising investment banks are American. JP Morgan at the top of the tree for the moment. European banks are still stuck in kind of an existential crisis. They don't know really what they want to be, and if they know what they want to be, it's difficult for them to get there because of the regulation and some of the market changes in Europe. The American banks got a lot of their sort of hard work done quite early after the crisis. They had less of a bad asset hangover than the European banks. They had a stronger economy in which to exist and to grow. And they also can thank their regulators, which is not a phrase you hear very often for banks, but they can thank the regulators for getting a lot of the work done quickly. Dodd-Frank was released in 2010. A lot of the implementation work, higher capital ratios, higher liquidity ratios, market structure, a lot of that's been done in the US. In Europe, that's still ongoing. The European banks are still sort of learning to adjust to or trying to understand what the new rules in Europe that are the equivalent of Dodd-Frank mean for them, and it's a difficult task for them. A lot of the investment banks here have cut down on their trading activities because the amount of capital that is needed to go towards them is just unsustainable. They've tried to move to a kind of a cross-asset basis where they merge a lot of the business lines together and deal with, let customers deal with them in one go, which is designed to cut costs and to make investment banks more flexible, more efficient, but it does mean that they can hold less risk, that they are offering often a smaller range of products. So it's
regulatory work and the economy is definitely playing in favor of the US banks. So we shall see what's going to happen in the near future. We'll catch up with you soon.
Great.